I'm getting ready to put a trade on, so I just wanted to talk through it. So I was like, what other better way to talk through a trade and go ahead and do a live? Let's see. I'm gonna hide everything, hide all my indicators. Now the market and what I have up right now is Nvidia. Excuse me. So Nvidia is currently down right now in the day, down about a little over 3%. Still reeling a little bit from the deep, what is it, deep seek news. So basically, China has its own version of open, what is it, open AI, and they can do it for a fraction of the cost that is being done here. So it's basically disrupting the AI market. And that's why you see Nvidia down like it is. You see Microsoft down, and you see a lot of the well, some of the companies that have something to do with it, they're down. Uh, I just looked at Meta. Meta's going crazy right now. But so you got Nvidia down. Now what you got to ask yourself is, will Nvidia continue to stay down? Like, do you think that Nvidia will continue to, go down? This is a 1 year chart that we're looking at. Now, it's quite possible that that it could go lower, right? We don't know. I don't know. I'm not gonna act like I do know for sure. But I like Nvidia at 119 as opposed to it being, if you liked it, this is my thing. If you liked it at 145, you gotta love it at 119. Or if you liked it at 152, so sometimes like we hear some news and you know, the market goes wherever it goes, and sometimes they call it buying opportunities, right? Or it can be. Now, for me, I'm gonna place an option trade on here. I want to get bullish. I want to buy it while it's down, and I want to see if I can get a quick pop, take advantage of a quick pop to the upside, and then place a small trade. Then we're going after that. I may buy. We'll look at some crypto. So let's go to the option chain. Now, something like Nvidia, Nvidia does have earnings after the bell on February 26th. So that's about what? How many days is that? Um, what, February 26th, about what, 27, 28 days. Now I'm gonna go out to maybe March. I want to be right around 36 days. Now, normally I would say do the monthlies. I don't quite know if I want to go out 50 days. Right. Now, just because I'm going out 50 days don't mean I have to hold it for 50 days. Just giving you more time. You may get better pricing here going out 50 days. I just don't um if you go out further in time and you buy what I'm going to buy, which is called a call spread, which is a bullish trade, a long call spread, you're not gonna if it only you're gonna need a larger movement to make the money. So I'd rather have less time. That way I only need about maybe a probably a $6 or $7 move to the upside. So I'm gonna do an in the money, uh, in and out spread. I may come. Let's look at buying the 120 and selling the 122. Right now, the mid price. Now this is a wide bid ask. It's showing me I got like 75 cent here, 110 here. Um, but it's a $2 wide. So the mid price is saying 92 cent. It so basically I'm risking 200 bucks because it's a $2 wide spread. Now, whatever I pay for it is what I can really lose on it, to be honest with you. So if I pay $92 for it, that's the most I'm gonna lose on it. And more than likely, I'm gonna penny this down. So what I'll do is because the price is right at 119, 190, I'm probably gonna go up. Let's buy the 119. Let's try to sell the 121. And then I'm gonna come in a little lower than what it's showing. Let's come in maybe at Let's try 85 cent and let's see if I get filled. Which I doubt I will, but I just wanna because the bid ask spread is wide, I wanna come in low. So basically I'm doing something almost like a price discovery, right? So now it's showing a buck. Let's penny it up. Let's go to 90 and let's see what happens. So now you can see I'm offering 90. The mid price is still saying a buck and it's saying 97. I'm not gonna pay more than a buck for it, but I want to see. Let's see. Let's go to 93. Matter of fact, let's go. Yeah, let's go to 93 and see if we get filled. No fill. It's still saying let's go to 94. Offer up 94. No fill. As long as I don't pay more than a buck for it. If it's a $2 wide spread, I'm at 95. No fill. This is why you generally will, I would say the monthlies are better. They're more liquid. The bid ask would have been tighter. We'll go to 97. Let's see. I got filled at 97. So it was showing a buck and I got filled at 97. I saved what, $3. If I would have just went straight in at a buck, that's what I would have paid for it. Now, so basically, now if I go click on it again, if I wanted to do more, I know I just got filled at 97. So that, I just, did a little price discovery. Now I'm gonna come down here. You see it says probability of profit, it says 45%. Now I'm not gonna try to make all of the business that I paid $97 for it. I'm gonna try to make maybe about half of that. Let's call it maybe 47, $48, $48, 49, half of what I paid. Now let's go back to the trade tab. It's telling you P50. That's saying that making 50% of the max profit, I got a 60% chance of doing that. I increase my probabilities by uh, being willing to take less for profit. This is called a call spread. I'm getting long. I need the market to go up in order for me to make money. And I could come here to the trade tab. If I come to the trade tab and go back to the analysis tab and look at it, you can see here green is where I make money. You see red is where I lose money. And I basically got a 50-50 shot. And you say, well, it's a 50-50 shot to make money, but the market is down, relatively speaking. It gapped down. See this big hole right here? I'm banking that Nvidia will rise a little bit. It don't have to go all the way up here. It probably go to about 130 and I'll be out of this trade and that'll be a winner and I'll be on to the next trade.